Why do some people think that Trading 212 is bad? Well, Trading 212 can be bad because it offers high risk leverage products like CFDs alongside an investment app that is aimed at predominantly, I think, new and experienced investors. That is the answer to the question you may have just asked if you've stumbled onto this video because you're looking for reasons not to trade with 212. But Trading 212 is not a bad investment app. There are just some bad points about it. Now, I've worked in financial marketing and financial services for 20 years, and if you're going to praise a product, you also have to list its cons. Be balanced, as compliance would say. This is even despite the fact that they are offering a massive 5.2% interest on cash held in an investment account with them. Now, that's clearly a loss leader to get bums on seats, but one thing Trading 212 are really good at is promotions to get new clients signed up. It's one of the hardest things to do in the industry, is onboarding new customers. Now, in fact, when we didn't include Trading 212 in our 2022 awards survey, there was outrage on the community forum. So one of the things that they are obviously good at as well is customer service and giving people what they want. I've noticed that a lot of free investing apps have developed an almost cult-like status among their customers. They're their best advocates, and social proof is so important for brands these days. We've also covered Trading 212 a bit when we looked at whether or not free stockbroking was here to stay, and they also get a guide and they also get mentioned in our guide to fractional shares. Now, both of these things are two massive positives for the industry, because the cheaper it is to invest, the more people can do it. And if you can't afford to spread your risk across a few different companies when a single Tesla share costs $185, giving people the ability just to dip their toe into the market and buy $50 worth of shares instead of full shares means that more people can have more diversified investments. But there are a couple of things that don't sit well. Every time I flick on social media, I see a lot of investment gurus. I mean, we don't really talk about investing, we talk about brokers, saying that to start investing you should buy an S&P 500 tracker with an app, and a lot of them tag or link to Trading 212. I mean, actually they're quite good at taking advantage of how social media is going at the moment, which is fine, because that's actually not bad advice. Even though nothing we do is investment advice, an S&P tracker is a good way to invest in a diverse range of 500 of the largest listed companies in the US, and Trading 212 certainly has a good low-cost offering for new investors. One of the other things they used to have was a free share offer, which again on the surface is fine. It's an incentive for opening an account. But I was having a chat, actually, rather a lively one, with a friend the other day about how free offers encourage the wrong type of investment, the investing for investing's sake. And it was really about whether or not that's a good or bad thing. I mean, I can see his point. You shouldn't invest if you can't afford it, because you can lose money. But then again, can you afford not to invest? Because when it comes to investing, the earlier you start, the better chance you have at making money in the long run. It's not about timing the market, it's about time in the market. One problem I have, though, is investing platforms cross-selling into CFD accounts where investors can lose money trading. So really, what's worse, not having started your investing journey at all, or waiting till you hit 40 to start investing when you've got a bit more money, or getting carried away with it a bit and thinking there's easy money to be made in the markets in your 20s. But then again, I suppose when you're in your 20s, these lessons don't hurt quite as much. But you should realise that you should be sticking to the fundamentals, because sometimes good things take time. Now, whether or not you think Trading 212 is bad is another matter, and we want to know what you think. They're in our awards survey this year. Go to the Good Money Guide and vote. If you've used them, go to the Trading 212 review page and tell us what you think. Your feedback helps us and helps other people make more informed decisions about where to trade and invest their money.